Today we're going to talk about why following chat room alerts does not work as a day trader. You simply cannot just follow somebody on the internet buying and selling when they do to be a profitable trader. I'm going to talk about that right here in this video, so make sure you stay tuned. Guys, Patrick here. It's the weekend. I wanted to talk about this idea. A lot of people keep asking during the live streams. They're like, tell us when you buy, because they want to buy. They want to follow me into the trades. The problem with that is there's actually a couple problems. There's three actual problems. We're going to talk about those three problems here. But first, let's just talk about a apparent problem. It's just the overall lag and the timing, right? The biggest thing is the timing here. If all of a sudden I say buy here at the 54s and the market squeezes up here to the 58s, I take profit quickly. I'm like, bam, awesome trade. What happens to you? Well, you're probably going to end up buying at the 56s, 57s, maybe even at the top. And by the time that I take profit, I can get in and out in 20, 30 seconds. So if I buy here at 55, 54, it squeezes the 58s, you're not going to be able to sell quick enough. You're not going to be able to get out quick enough. You're going to get a terrible entry, and then all of a sudden it's going to reverse and you're going to lose money. You're getting in at a bad time as well. You're getting in at a higher point than I am, and you're also going to have to sell basically at a lower point. So if you don't get out here, you're going to end up losing a lot more, just because the sheer fact of you just can't get into it at the same exact time that I do, especially if the market's moving quickly. If the market's consolidating, going sideways, sure. But for me personally, I'm a breakout trader, so it's very hard to jump in right when something breaks out. If I'm like all of a sudden, buy 54, buy 54, and then right then and there it goes to 58, and then you buy at 57 and it crashes down here to the 42s again, and now you've lost $1,000. Are you going to be happy? Are you going to be excited that you bought when I bought, or are you going to be mad because you ended up buying at a higher price and I ended up selling into that push up? This is also very common in the stock market with the small caps, the lower float stocks. People will alert that they're buying a stock, and then all of a sudden everybody in their chat room starts buy, and the market moves higher, and then all of a sudden, as soon as the chat room owner or the chat room alerter says that he's going to sell, everyone starts to sell, and then the market reverses, and then everyone's stuck holding the bag. So that's a big issue. First off, is just the timing alone, not being able to get in a good entry, and then not being able to get out at the top here. And telling you right now, if you try to buy exactly where I'm buying and you got a 10, 30, 40, or even a minute delay and you can't get in at the same price, you're just going to get in at a much higher price, and you're going to end up getting dumped on, and you're going to end up losing money. So that's really the first issue, and that's timing. The second issue with trying to follow somebody on YouTube or trying to follow someone in Discord buying and selling when they do is going to be understanding the risk to reward. Somebody that has a chat room, that's selling a course, that's selling alerts, that has a paid service, they're making a lot of money from that paid service. So they have a lot of money coming in every month. And let's say you make $100,000 a month with your chat room, with your paid service, with your course and everything. You're able to risk a lot more. You're able to hold on to losers longer. You're able to just basically, be like, hey, I make $100,000 a month. I can easily lose, $1,000, $2,000 a day, and be totally fine emotionally, mentally, and not really care, because I can just get in, I can call alerts out, and if they don't work out, I can get out of those alerts. I don't really care because I have a lot of money coming in. The chat room leader will call out a trade, and he'll make it like, okay, from 64 to 69, 4 handles. If I do that with 10 contracts, I can make a ton of money. 5 contracts with 4 handles, no problem. But for somebody maybe trading the micros, or they're trading, maybe only 1 contract, they have a smaller account, they don't have a lot of risk. All of a sudden they end up getting in. Remember, they're getting in at a higher price. So if I buy at 64, you're getting in at like 66. It goes to 68, and now you're holding it. And you're like, okay, I'm going to hold. It's going to go higher. He said it's going to go higher. And then all of a sudden, guess what? It starts pulling back here from the 68s. Let's say you got long at 67, and now it's all the way down here at the 55. So you've now had a massive loss because you're hoping, you're praying, and this is a lot about the emotions as well, and then understanding that you have a different risk to reward than whatever the guy that's alerting these alerts are. So trying to follow some other trader based on their entries, their exits, The big issue, again, is risk to reward, because their risk to reward is going to be different. Their sizing is going to be different. Unless you can like magically somehow get in exactly when they get in, get out exactly when they get out, trade the exact same size. Even then, the problem is they still have all that money coming in every month. They're making tons and tons of money selling you alerts, selling you a course, selling you the chat room and all those things. So they're not as dependent on that money, where you might only have $1,000 in your bank account and all of a sudden you've lost $1,000 on the first alert that was sent out on the day because you ended up holding it because your risk is not in line with whatever the chat room owner is. And what's interesting is you can see this market actually ended up kind of squeezing back up later. So maybe, you know, they got in here at 60s and they were like, screw it, I can hold for this area down here, the 50s to hold, and they can have a much larger risk. I've seen this happen as well, you know, where the guy, like I said, in the chat room, they don't have the same risk to reward that you have. So they're able to maybe have bigger risk and to hold on to trades. And then the trade ends up working out and going in their favor later on. But the problem is, if you can't hold through the drawdowns, if you can't hold through that pullback because your risk to reward is different than their risk to reward, well, you're going to end up losing money, and then the market's going to go higher, and you're going to end up, you know, mad and upset and pissed off. For the third and the final, probably the most important reason that you cannot follow somebody on the internet to be a profitable, consistently profitable trader, why can you not do that? We've already talked about the timing. We talked about the risk reward, but let's just talk about the emotion. Let's talk about the mental. The problem here is if you get into a trade and it gets alerted and it's like, okay, we're going to buy 70s. It's going to go higher. This is the plan. Well, you end up buying 70s and then all of a sudden it starts pulling back. Well, the chat room guy, he might have his stop loss at 65. He gets stopped out. He's like, okay, I'm out. Well, are you going to be able to take that same stop? Are you going to be able to get out? You're a new trader, or maybe you're just emotional at that point because you're in the red. Are you going to be able to get out of that trade? Are you going to be able to cut it off the same way that the chat room owner who makes $100,000 a month from his chat room is going to be able to cut off that loser? Are you going to be able to just walk away from a $500 loss day? Or are you going to keep trading on tilt? Or are you going to keep forcing trades, right? That's the big issue here. If you can't understand why you're getting out of the trade, if you can't understand why you're holding a trade, if you don't have a reasoning for entering a trade, you're not going to be able to execute that trade. You're not going to be able to take profit. You're not going to be able to get out of the trade. I've seen this happen so many times where if you don't understand the actual reasoning to buying and selling, whatever the alert is, whatever the trade is, if you don't understand the actual risk to reward, and then also understand the timing, but understanding just the fact of the emotion of why you're entering and why you're exiting and understanding all that, and then controlling your emotions through the trade. If you can't do that, you can't be profitable, right? You have to understand that every trade you're going into, there is a risk, there is a reward, but there's also, you know, these plans. We have a stop, we have a target. If you're a new trader and you're just following some guy on the internet, I guarantee that you're not going to get out at the right time. I guarantee that you're not going to take profit when you should, because you're going to be greedy, because you probably lost money on a previous trade and then you're trying to just make it back on this next trade. You're not going to cut off the loser. So these are all emotions that come from following alerts on the internet or following a chat room guy who's telling you when to buy and when to sell. The goal for my live stream really is to talk about the overall action, the trend, kind of what I'm seeing in terms of support, resistance. And that's a very doable thing. If I can talk about, like, I think, okay, look, like, we're going to pull back here to the 50s. We're going to hold this 50 level. I like this area here at the 50s double bottom. I'm thinking about getting long. Like, if I'm talking about that idea, but maybe I don't say, hey, like, buy right at 50, but I'm just saying I like this kind of overall structure. I like this price action. If we can get a breakout over 61, like, this is something I talk about a lot in the live stream, you know, these key levels. We're talking about levels more so than like, hey, buy here, sell here, buy here, sell here. But more so talking about where the market's at right now, where I think it could possibly go, and just really kind of identifying support, resistance, and the overall structure. You know, we killed it on Friday. We talked about so many times. I had each of these little moves happening, and I'm like, hey, I think this is going to push back up. I'm seeing support there, previous resistance turning into support. That's what I like to see. And this is kind of what I think, you know, is a valuable lesson or a valuable tool for you, but not so like me being like, hey, buy at 43, sell at 70. But more so like, let's just kind of look to see if we have an agreeing outlook on which way the market's going to move. If we are agreeing on the overall action, Do we think the market's going to push up from here? Do we see a key level? Do we see support? Do we see resistance? Is the market slowing down? All these things will affect your trades, right? Like if you understand that the market's slowing down when it's selling off here to the 40s, well, then you're thinking, hey, it's a good time to be buying long. You know, we got to understand these things. It's not just like, hey, timing wise, buy when I buy, sell when I sell, and then also have the same risk to reward, because you're not going to have the same risk to reward, because your mental and also your capital is going to be much different than the guy who's trading on YouTube or trading in a chat room. And then thirdly, you know, you should be able to understand why you're entering. You should be able to look at the chart, just like me when I'm looking at this chart, and be like, okay, look, you know, if we break out over 60 here, I think we're going to test the highs again. So you need to understand why these trades are taking place. You need to understand why the action is telling us, you know, these reasons on why to enter and why to trade. So when we get this breakout over 60, look, woo, all the way up there to the 84. So beautiful move there up to the 84s and that break over 60. And right there it is. So there it is. Very simple. 3 reasons to why you should not follow someone on the internet trying to trade their exact entries and exits.